We're going to talk about FTX into BlockFi here. So obviously, and I would love to get your take here, Mike, as you have a lot of experience here dealing with the financial markets and the stock market, and obviously the crypto markets that you guys trade continuously over at Parada Capital. But we had a message here from Zach Prince over at BlockFi. This was actually earlier today at 8 a.m. Eastern Standard. Today, BlockFi signed a term sheet with FTX official to secure a $250 million revolving credit facility, providing us with access to capital that further bolsters our balance sheet and platform strength. Really like that Twitter is becoming the blog release of the the crypto space. Like, there wasn't a blog associated; it's literally just a thread from Twitter, which is dope to see. But give us kind of the breakdown here, Mike. What's the summary of what BlockFi is doing here, and does that signal kind of a rest easy for the space that's kind of in a flux right now in the bear market?
Yeah, I think overall it is a rest easy. I think context is very important here. BlockFi, in the middle of the bull market, raised a round that had their company valued at something like $3 billion, which for the amount of revenue they're putting out is pretty wild. Obviously, bull market, right? Everybody kind of wants to hop in. So, the super cycle meme applies to private markets just as it does to public markets. So the context is basically that they announced a handful of days ago they were going to run what's called a down round in fundraising, which is where you raise at a valuation that is less than the previous valuation you raised at. They were doing a down round at 66%, meaning that they were going to raise at a valuation of $1 billion instead of $3 billion. This burns those VCs and those investors in that $3 billion round, some of whom were very, very large, very influential. It's going to make it difficult for them inherently to go and raise, even if they raise $50 million at a $1 billion valuation, it's still going to be difficult because of kind of what they turned around and did so quickly to those investors who invested at that $3 billion valuation. So that's kind of contextual piece one. Contextual piece two is obviously all of the issues that we've seen with Celsius and all of this contagion around bad borrowers, right? Three Arrows Capital. I'm sure there's a handful of other smaller funds or whales who have kind of been caught up in this. But, starting with Luna and Terra, as everybody knows, that contagion spread to Celsius. It spread to Three Arrows Capital in some kind of, timeline there. And the concern for BlockFi theoretically and kind of allegedly here is that if they had taken too much of a hit from some of this contagion, it would make it that much more difficult to raise at that $1 billion valuation. Third piece of context, most simply, is obviously that the traditional markets and traditional venture capital and traditional private equity are going through like a massive risk off time frame now, right? Stocks are going down just like crypto has. So nobody's really kind of ready to dump some cash into what I would call like a distressed crypto company. For whatever reason, people like to invest kind of towards the top with momentum than they would trying to kind of get in with a brand that I think is still very strong in BlockFi. Sam saw that. So it seems to me like Sam will effectively provide a nonstop $250 million line of credit to BlockFi. Obviously, behind the scenes, there are terms that are going to be super beneficial to FTX, but this is what FTX does, right? FTX is now one of the major exchanges. They're loved by what you would call kind of your sharper traders, those who maybe come from more of like a traditional financial background or traditional trading background. They do some really awesome things with margins. So they're killing it. They're making a ton of money. They did the sponsorship thing in the bull market, and now this is kind of their way to buy the dip of sorts. I'd be interested to see what sort of activity they have through their Blockfolio acquisition that they made about a year or so ago, and kind of the lending and borrowing activity that's happening there. again, overall, I think this is good for BlockFi. This is good for the space. There are some other things that Sam and CZ and some of these folks have done, it seems, to kind of make sure that the market can kind of base and settle, and we don't keep dealing with this contagion, and the price doesn't keep going down. So I think overall it's good. It's certainly, if you were a BlockFi investor, one of these big VCs, you're absolutely wrecked right now, especially if you invested in the last round at a $3 billion valuation. If you're somebody who has money with BlockFi, I think it's better than not having this news, because now one of the largest kind of growing like crypto banks of sorts in FTX and in Sam has now largely made a partnership with BlockFi. So that's kind of how I see it. Obviously, you can't know all the details behind the scenes, but kind of piecing some of that context together, I think, helps give us like a good idea of what's going on behind the scenes.
Yeah, and obviously this event has a lot to do with trying to figure out where we are going forward, right? We can't continuously have like BlockFi getting completely liquidated or just like go under, or else the market's going to continue to kind of plummet. But Bitcoin sitting at 21, Ethereum sitting at, I'm thinking, let's see, I had it up here, 1100. Poner, do we think, and maybe you don't have to bring in the BlockFi Celsius piece here, but do you kind of, in your mind, think that we're kind of settling here? Do you think we have a little ways to go?
Yeah, I was gonna say I just learned something from Mike, so I don't think I can add any commentary there. Whenever I hear down round, I just think of Silicon Valley. If you guys have seen that, where they talk about like down rounds and stuff, that being the
Yeah.
kiss of death.
Just,
Um,
just being a retail investor, do you think that we're kind of settling here? Like it just give me your gut feeling.
so for reference, I'm the guy that sold like 20 Ethereum when the war in Ukraine started because I thought that was going to make it go down more. So I know nothing about markets. I need to give that context just because this is
That might have
purely
been a good sell,
speculative.
though.
It was terrible. I sold at the bottom and then it went up to like 3,000. I think I sold at like 2,400 and then it went back up to 3,000. See, I thought it was going
Well,
to be a good sell, but
you're up
just with
now.
everything, yeah, yeah, with everything in the market, I mean, it feels like it's going to be just a little rebound. I think that there's a ton of room for crypto to go down still over the next year. So I plan on just dollar cost averaging. I think the most interesting thing that I'm going to be looking at is just like when and if NFTs and NFT pricing fluctuates at all based on lower ETH prices, because like I think most of the people that are in it right now, one ETH is one ETH, but that's fine for people that are in it right now. I think there's a ton of people that friends are going to tell, go buy your first Ethereum and look into these NFTs. And now it's going to be new people buying in with Ethereum at that cash price of whatever they buy in at, whether it's $1,000 or lower. Um, then that makes it a lot easier to buy a 4 ETH project if you're putting in 4 grand, as compared to a lot of people that bought 4 ETH when it was 3,000 and that was 12 grand.
Yeah. No, well, I learned something from you there. I mean, that's really interesting. I hadn't thought about that. I mean, especially if we do go lower in ETH price and we're at like 700, 500, right? Now these half ETH floors or 2 ETH floors, or I don't know where the goblins sit now, but some of these kind of mid-tier projects that maybe the floor comes down a little bit over these next few months. It's, 200, 300, $400, half ETH floor. That seems like a very fair ticket price if you assume that, we're obviously going to not only see ETH climb, but also see NFTs continue to evolve and continue to grow in these communities to do the same. So that's a really good point.
Yeah, so I wanted to get on this last piece for BlockFi, which was the lending services. Obviously, like people are trying to find areas where they can kind of park their USDC, their stable coin, or even their ETH to find some type of yield here. Mike, is there anywhere that's, and I don't want to use the term safe because it sounds like financial advice, but like where should people be looking to park their money when BlockFi, Celsius, all of these traditional places, or I quote unquote cryptocurrency traditional, but traditional places are saying, hey, throw your money in here, it's safe, and then you see a Celsius situation where I can't even withdraw my funds anymore. I'm screwed. Where should people be looking to kind of chase yield? Again, not financial advice.
Yeah, yeah, definitely not financial advice. I mean, you have to kind of look at this and make a decision based, I think, on your own risk to reward metrics, right? I, it's not a happy answer for those looking to get yield right now, but obviously right now is kind of the sketchiest time ever to go and try to get 4 or 5% on your dollars. If you put 10K in and you're risking basically $10,000 to make 400 in a year, is it really worth that $400 versus waiting kind of 3 months or 6 months or even a year for kind of all of this to settle and all of this to shake out? Um, you know, it's funny, but if you just look at June and try to remember the sentiment that you saw on Twitter or with your friends or whatnot, I think largely more people with the Luna situation than I would say the Celsius and certainly the Three Arrows Capital situation saw Anchor kind of starting to have issues. Right? They never switched from this fixed 20% rate to a variable rate. They started buying Bitcoin, and Bitcoin started to kind of get a little shaky. Right? Like you could kind of see that system falter a little bit. But then Celsius was like, holy cow. Definitely didn't see that one coming. I mean, there were some hints in the past. Mashinsky was kind of doing some sketchy stuff with how he was using funds to get those massive APYs, 10 to 15% at any time. And then finally Three Arrows Capital, which is like, that would be like the equivalent of an Apple coming out and having like massive fraudulent areas of their business, right? I think most people would look at that and say like, what, that would never happen. And that was the brand that Three Arrows Capital had. Most people kind of on the trading side expected them to be hedged or making money on the way down, whereas they were seemingly just kind of loading the boat more and more as the price went down and down. So the point of all of that is that surprises can happen. Right. And you, especially at this time with such a sketchy macro backdrop, you have to really look at your risk to reward and be comfortable with it. To the point where it's like, if you need, let's say you have that $10,000 and you need $1,000 over the next few months for expenses or something, like it's, maybe it's better off to just take 1,000 of those $10,000 and use that versus trying to throw it into some sketchy, 25% yield farm or something somewhere, not knowing kind of what smart contract health is looking like there, or kind of who's involved or what sort of contagion might have spread. So I think you have to be super careful right now.